Yeah, I just want to comment a little bit on the silver and some of the rumors and stuff and the advice you get from some people. More famous people. I'm not talking about anybody on YouTube because I think everybody on YouTube, with a few exceptions, are we're all amateurs. So we don't really know everything that's going on. We are more flexible, I think, in how we think, though. I just want to point out something about what Max Kaiser said. A lot of people criticize him for saying that silver, J.P. Morgan would break at $50 an ounce price of silver. And actually, I'll tell you, J.P. Morgan wouldn't break overnight. It's a big company. It would just, implode and blah, blah, blah. I mean, there'd be so much delay in anything happening, even if it was dramatic, that it wouldn't happen very fast. But I want to point out that when silver did hit 47, they dropped it fast. I mean, like $11 or whatever it was, more than $11. I mean, down to 33, and they dropped it with the CME raising up the margins, and that was the timing, of course, overnight in the wee hours, the Asian holidays, so they can come up with the margin, the money they needed to put on margins, so they were closed out of their options and it dropped the price, blah, right? Now, people can call that market manipulation, but I don't really call it that because, not that I agree with, well, it's the shorts. Everybody who's on the short side wants to win, and they're going to play any legal way they possibly can. I mean, they're saying the market was overheated, so they did it. I mean, it wasn't really because of that. It's because they're on the short side, and they don't want to lose money. That's why they did it. So I think there's a lot of truth about Max Kaiser saying that's the breaking point, because look what happened here, right? Now, silver was probably still too high. And I want to point out something that I saw on a news clip a couple of days ago. I don't remember the guy's name, but he's supposedly been around a number of years. They call him a guru of predicting the quarterly reports of Goldman Sachs before they come out. He says Goldman Sachs and also J.P. Morgan are going to post losses for the third quarter of 2011. And I found that pretty surprising. But then I started thinking about this too, and that's something else I was agreeing with. I think it's Chris, who's on the YouTube here. That if they had to come up with more physical silver because the options met the price, met the strike price, there would be more trouble. They're probably still losing money all the way along here too. The price is too high. I mean, we were told about the price going up to 25 way back here that was going to kill them. It probably is killing them. It probably is. It's a big company. It doesn't go under right away. I mean, there's a lot going on. Them getting a Volt license way back here. I forgot what time it was, but it was in earlier 2011. They got their Volt license so they could take delivery of silver and satisfy the requirement. And some people were speculating maybe they weren't going to take actual delivery of it. That's just another delay. So this actually makes it, this price, bringing this price down to this, makes it like less physical delivery. Well, I'm going to tell you right now, I don't think the spot price is going to separate too much from the physical price as much as people think, because it's all tied into mining. If they don't, if they're getting paid off this spot price or whatever, how it's working, somehow I don't think this whole market's not going to work. Some other market's going to come into play. I don't know. I don't know. It's not going to work. Period. Because we do use electronic markets, and they're supposed to represent something. If something's dishonest, it's just going to shut down. It's going to slow down mining. And if the stuff is actually used in the industry, forget about it. It's not going to work. So I don't think they're going to be able to hold this price down artificially. I mean, they could do little moves like this, but let's look at something else. The dollar, right? The dollar index went way up. Everybody poured into the dollar. Where's that money going to go? I mean, they poured out of the euro stocks, the American stocks look like they went down some. No longer is the safe haven in the Swiss franc. The Japanese yen is pretty high. There might be some foreign currencies, but all the currencies have been going down in relationship to gold. What's going to happen is it's going to go right back into the commodities more likely, maybe the precious metals. These dollars got to find a home. I mean, they're not going to stay in dollars long term. I want to point out also that Jim Rogers, he bought the dollar, and he went long the dollar, even though he doesn't like it. because he figured this move was going to happen. That's somebody that should be paid attention to a lot careful, because he actually will tell you some things that happen short term, versus like, something like Peter Schiff. Forever he's just telling you, buy gold, buy silver, and they're doing this wrong with the economy. He's basically a broker who's selling his securities, and he's looking for political office. He doesn't tell you a lot of specifics, and that's not really good. I wouldn't really try to jump in and out. I mean, even sometimes I do, a little bit. But, if I would have known about this move, I would have jumped. I'm not in electronically as much as I am physically, but I am in electronically also. But yeah, if I would have known this move, I would have jumped out and then jumped back in, obviously. Because, I do believe in dollars. Fiat money still buys stuff. I'm not totally against it. It's just that it's a lot of dishonesty in it. I mean, it's not actually, I don't even know if we even have a fiat dollar, because in fact, our money is backed by oil. It's just that there's a lot of mismanagement of what things are going on, a lot of crookedness, a lot of, it's not so much that the paper is such a bad thing, as long as it actually is backed by something real. Like I could look at the SLV and the GLD, I don't like it, but I like what Eric Sprott's doing. I mean, I think those are good funds. He has PSLV. He actually has the physical metal there, I think. I haven't seen it, of course, but I mean, we get real that if we start trading physically silver, we're going to be going back 200 years, so I don't think that's going to happen. I think the dishonest markets are the ones to really watch for. And, there's a lot of dishonesty that's been around for a long period of time. But I can tell you, I don't think this is going to last very long. I think this year, we might see record prices in silver and gold, maybe platinum and palladium, because platinum, doesn't make sense that platinum is below gold right now, and palladium has dropped this much, even though there's more cars being produced in China, and there's a lot of investor demand coming from China and India for platinum and palladium. I'm a little suspicious of the spot price, to tell you the truth. It doesn't make sense why things that, platinum is 30 times more rare than gold, and why is it below gold? And same with palladium. It's 30 times more rare than gold. The Russian stocks, the stockpiles, they used to produce 60% of the world's supply. They went down to 50%. The last I heard, it's 44%. They're the main producers. Then in South Africa, they're very unstable politically, both for palladium and platinum they produce. The mines aren't being as maintained as much because they're going to be turning them over to other people. And, there's always a threat that they could be nationalized. So I think anytime they want, they can start bringing out stories about this and that, and they could drive the price up. And that's, a lot of stuff is brought down by psychology, and a lot of stuff is brought up by psychology. And I could, relate that with oil. Goldman Sachs back here, when the oil was like 147, they were saying it's going up to 200. They knew better. That's the game. It's a card game, and if you could play the game, I mean, Lindsey Williams was telling me the oil's going to be 150 at the end of October, or 200 at the end of October this year. I don't think he was lying, and he's not Goldman Sachs, but and I think possibly the timing was all pushed off by Libya being so tough to crack. But I'm just saying, market sentiment it's all psychology, and market sentiment is always high when stuff's going up like this, and it's always low when it does stuff like this. And people are all scared to buy when it's down here, and they're all ready to buy when it's up here. That's something Mark Faber says all the time, and that's really a lot of partly why he wins, because he wouldn't be buying up here. He'd be buying down here because everybody's scared down here. It's going to drop through the floor, right? That's where he'd be buying, and I think that's what's going to be happening with all these dollars that went into the U.S. dollar index from selling off European stocks. They'll be back into gold, silver, platinum, palladium, agriculture, maybe crude oil. I think my bet is electronically crude oil is going up. Not happening right now, but and they actually revised their forecast from Goldman Sachs, revised the WTI from 115 down to 97.50 for the next 3 months. But sometimes they were a contraindicator because, like in July, they said it was going to be 120. What happened? It went down to like 90. Uh, Not good. And from like 110, it went down to 90. So I'm just holding long because I think the two people I kind of listen to is Jim Rogers, which, obviously he's probably not just, maybe he is holding long all the way. I don't really know what the hell he's holding, but they're in oil, and so is Mark Faber. And I think China's demand the last 4 years has been 2.5 times the demand they had in the last 4 years have increased. So oil is being used up globally at a faster rate. Western nations might be using a little less, but there's more than enough coming on from China, car production and everything. And speaking of car production, platinum and palladium are used in car production. And China's car production now is past the USA. So I don't know why these things are dropping in price. I don't think there's like some major slowdown in China. They make it sound like when something slows down a little bit, it's all psychology. But it's going to take a little psychology to bring all these things back up again. And I think part of the psychological game is Bernanke played this very shrewdly. They're going to demand him to, do something. He's going to do the quantitative easing. And now there's going to be less tools for them to manipulate the commodities down with the interest rates. They can't do anything. They got no more room to do anything. These things are all going to go way the hell up. I want to say something about Lindsey Williams. I don't think he's bad. Obviously he's not a financial guy, but he's honest. And I think the information he's getting from somebody is pretty good. For a long range information. He says gold and silver are the money of the elite, and I agree with that partly, but what really convinced me about these metals is something that Mark Faber said in one of his long interviews. I listened to him 1 minute at a time because this guy I really put a lot of faith in. I don't put him in Bob Chapman, Peter Schiff. You listen to him a few times, you heard everything they got to say. But Mark Faber said that he says a lot of his Jewish friends, which are big money friends. He's got friends that are billionaires. They're putting between 30 and 100% of all their money into metals, the mining, and like some of the essential commodities. Some are like 70 to 100%. Some are like 30 to 70%. But nobody is doing that. That's an average American. Practically nobody, except maybe some of these people on YouTube or something buying lots of silver. But I don't think silver is the only good play. I think palladium is going to be a better play in a longer range. I think that's going to be exceeding the price of gold because of the technologies that are going to be used in hydrogen production, which palladium absorbs 900 times the hydrogen. Cold fusion, I don't think is a crackpot theory because it was developed by a couple Nobel Prize winners many years ago. And all of a sudden, let me put it this way, the energy market is the biggest market in the world, and it has a lot to do with, price agriculture and everything like that. But, people talk conspiracy. I just talk monopoly and protecting your revenue stream. That's the most important thing. So that's a lot of reason people don't, it doesn't just change right away because to protect that money. They don't like competition. And that goes right back to the mentality of John D. Rockefeller. I'll just tell you a quick story here. John D. Rockefeller didn't like competition with alcohol sales from the farmers for like the earliest cars. The earliest cars used to run on gasoline. They used to run on alcohol from like the grains. They just had to do a simple little adjustment inside the car with the a thing that went down into the carburetor, adjusted the mixture, and they can run alcohol. So when they went out to the countryside, they got alcohol from the farmers and put it in the car. John D. Rockefeller gave, very shrewd, this is slick, $4 million to the women's suffrage movement, who was trying to ban alcohol in the United States, because of all the problems it creates, all this, the devil's brew and all this stuff. Well, he gave them $4 million, and that got a big push, and that actually ultimately led to prohibition. There were a lot of the force behind it. A lot of the money behind it was from John D. Rockefeller, and all of a sudden, that knocked out one of his main competitors. He couldn't stand. The problem was the farmers.